Should you invest in NextEra Energy? This is the NEE Stock Analysis, actually a part 2 because I did a one before this, but is an updated version of that analysis. So this is StockerFinance. I'm your host, David Scheuer. Make sure to follow me on twitter.com/StockerFinance or support the channel at patreon.com/StockerFinance. So NextEra Energy is currently worth $148.87 billion, a little bit more than when I last reviewed this company, did an analysis of it. We've seen a 6-month return of 33.67%, so a very nice return there. It's pretty much fully recovered from the pandemic low back in March. 52-week high of $302.95, 52-week low of $43.70. Now, if we go ahead and keep looking at it, here's a 1-year return of 36% or 36.77%. Over the past 5 years has a return of 202.63%. So a very steady and nice return there. It also has a dividend yield of about 1.84% and a PE ratio of 38.33. This company is not necessarily a cheap company. This isn't necessarily a value investor's company, but I do consider a very nice growth stock, even a little bit of a good dividend stock as well for you dividend investors out there. Just a really interesting company that's getting into a lot of new spaces. I think it's going to benefit really greatly in the future and moving forward. I'm expecting to see a lot of growth from this company on top of its already steady and very healthy growth. Now, if we look at the max here, over the past 10 years or 20 years, so since 2000, it has a return of 1,281.64%. That's an average yearly return of around 64%. That's pretty incredible. So if you're an investor in this company, I think there's a couple things that I'm going to say before we dive into the numbers here. Number one, this is not a company that I'm expecting to be a 10-bagger this year or anything like that. This isn't a Tesla or an AMD. It's not a Snapchat. None of those companies which I've done analysis videos on as well. But this is a very steady growth stock. I think it's a very safe investment going into the future. As Biden recently got elected, which means he's going to invest heavily into green and renewable energy sectors. There's a lot of different tax incentives coming as well in his plan, could greatly benefit this company. On top of that, this company is heavily involved in Florida. So the Florida Power and Light Company is one of its subsidiaries, one of the largest, if not the largest. It actually might own the 2 largest energy utility companies in Florida, which is a huge thing because Florida's population has been booming. They're experiencing a lot of growth down there. Tons of retirees have been moving there to take advantage of the no income tax state, as well as the warm weather down there. That's all benefiting this company substantially. And I've just seen a lot of growth. It's reaching new all-time highs. It's pretty awesome there. Let's keep moving on here. So I'm going to go through some highlights from its last earnings report, just get a little feel for the numbers of this company. We're going to take a look at its balance sheet, etc. So first off, here's some highlights. NEE, which is its it's a ticker symbol. Sorry if I'm stuttering a little bit. It grew adjusted earnings per share by 11% year over year, so excellent growth there. Continued strong execution at Florida Power and Light. They said all of their major capital projects, including one of the largest solar expansions ever in the U.S., are remaining on track. So this company is taking on some massive projects, by the way. They actually plan to expand the U.S.'s entire battery storage by over 50% in the near future, and then expected to double just with their battery storage investment. So only this company doing it by over 100% in the near future as well. So over the next few years, customer bills 30% below national average, so that's really good for their customers there. Gulf Power performance remains strong. Cost reduction initiatives and smart capital investments remain on track. Record quarter of origination at Energy Resources, so 2,200 megawatts originated, including the world's largest standalone battery storage project, as I was kind of talking about a little bit. So net 1,450 megawatts added to renewables backlog, which now totals more than 15,000 megawatts in a renewables backlog. NextEra Energy Transmission announced agreement to acquire Grid Lions. So one thing about this company that you want to take in mind, it's more of a holding company than its own little thing. It has tons of different subsidiaries. It's always investing in new companies. It takes on massive projects. I mean, it's a nearly $150 billion company, but I still think there's a lot of room to grow. I'm not saying this is a value investment. I'm not saying this company is undervalued. I think it's pretty fairly valued actually right now. But I think in the future, we're going to see lots of growth. And if you were to invest in this now and say, look, 10 years into the future, and then compare the price it currently is at to the price 10 years from now, I think this company could be undervalued, especially with how it's set up for growth. Let's keep moving on here, though. So here's the Florida economy. As I was talking about, Florida is recovering significantly. Florida building permits, so more buildings, pillar permits that are giving out means more structures going up, which means those structures are going to need utilities, which means this company is going to benefit from it significantly. Let's keep moving on. Here's the NextEra Energy EPS summary. So FPL, Florida Power and Light, we see the growth from 2019 at $1.40 per share. And this is GAAP, by the way, to 2020, so $1.54, which is a 14-cent change there. We saw a positive 2-cent change for Gulf Power. Energy Resources, we see a loss of 2 cents, not a huge deal there. Corporate and other change of 55 cents there, which is awesome. That increased by 55 cents. So from a loss of 53 in 2019 to a positive for corporate and other of just 2 cents in 2020. But still, the fact they were able to reverse that in 1 year is pretty crazy there, and great for this company. So total $1.81 in 2019 to 2020, $2.50, which is a 69% increase there. Now, if we look at adjusted, it's kind of a similar thing there, although we will see corporate and other a loss of 10 cents instead of a positive change of 55 cents. So just slightly different there. That is adjusted. Now let's move on to some energy partner highlights. Again, there's so many different moving parts for this company. It's a very complicated company, one that's really hard to do a short analysis video on. I could make probably a 3 or 4 hour video just on this company. I could write a massive report, but for the sake of this video, I'm trying to go over a quick summary, and that's why I'm talking really fast, stuttering a little bit, and it might seem a little confusing just because there's so many moving pieces, so many different subsidiaries, and just so much going on. It has like 10 projects going on at the same time. So a lot going on with this company as of right now. Now they've achieved year-to-date a growth in adjusted EBITDA of and NCAFT of 16% and 50% respectively. NEP board declared a quarterly distribution of 59.5 cents per common unit. So that's up 15% from the prior year comparable quarter. Earlier this month, NEP completed the successful conversion of $300 million convertible debt into NEP common units. And then they go on to talk about some other things as well as their organic growth investments. This company is always investing into new companies. It's always trying to do acquisitions, etc. And we're going to talk about a potential acquisition coming up right after these numbers here. So let's go ahead and look at some quarterly data here. Now you can see since 2019, 0630 to 2020, 0930, they've had very steady growth. Obviously, they've fluctuated a little bit in terms of the revenue, but if we go down to net income, you'll see a slight decrease, but over since 2019, 09, 30, they've increased pretty substantially since then. So is this the best they've ever done? No, not necessarily. But are they growing? Are they recovering from whatever happened back during that time period? Yes, significantly. And does that mean year over year or in a total year they aren't growing substantially? No. I mean, they're definitely improving. They're growing, very steady growth, and we'll see that steady growth in a second here. So you can look at their gross margin, which is up to almost 80%, operating margin of 27.78%, and net margin of 21.45%. So it's a little lower than whatever happened in 2018. I actually need to do some more research there, find out what event took place there. Their operating margin declined, their gross margin was steady, but their net margin increased substantially during that time period. So I'm really curious if maybe they just cut a bunch of expenses during that time or what was going on. I'm not sure, but it's definitely interesting to see this nice and steady growth on all of these different metrics. Stock price has seen an extreme increase in value in the past few months, in the past few years especially. One thing you're going to notice here is their dividend payout has pretty much steadily grown since the beginning, since I believe it was 1980 when this company went public, and it's actually a significantly older company than that as well. But the dividend yield has decreased, and that's because the stock price is increasing faster than the dividend payout was increasing. So because of that, because the market cap is increasing so much faster than the actual payout itself, we're seeing a dividend yield decreasing. That doesn't mean the dividend isn't growing, just the yield itself is increasing because the stock price is increasing faster in the payout, which means the ratio is going to decrease over time. So for dividend investors, maybe worrying, but it's not the end of the world. However, if you're looking for a really high dividend yield, this company may not be the one for you. Let's move on to some news here. This is where it gets really interesting because I've already gone over the numbers and details, and that's why I kind of skimmed over that part. The last video I made on this company already went over that section. But let's go ahead and talk about what's new and what's going on because it's extremely exciting for this company moving forward. So they have a $15 billion bid for Evergy, which is another energy utility company. Now, NextEra Energy, I'm just going to kind of abbreviate some of this article, is the world's largest producer of wind and solar energy. It's made roughly $15 billion in an all-stock acquisition offer for U.S. power utility Evergy Inc., which is people familiar with the matter said on Monday. Now we're skipping through this article a little bit. I'll link it below if you want to read the whole thing. The author for Evergy shows how NextEra Energy is seeking to capitalize on a rally in its stock by pursuing large acquisitions. In September, NextEra Energy was rebuffed by Duke Energy Corp, another major utility, to approach with a takeover offer. NextEra's bid valued Evergy, I keep wanting to say energy, but it's Evergy, in the mid-60s per share, said the sources. Evergy informed NextEra Energy that the price was inadequate and that it also required a detailed plan to overcome regulatory hurdles to a deal, said the sources added. Evergy shares ended trading on Monday up 5.4% at $57.99. NextEra shares ended trading down 0.3% at $75.51, giving the company a market capitalization of $148 billion. NextEra Energy, the largest U.S. utility, owns 2 electric companies in Florida, serving more than 5.5 million customers. Already touched on that a little bit. Florida Power and Light Company is one of those. And it's the biggest producer of renewable energy. It briefly surpassed oil giant ExxonMobil Corp's market capitalization last month. The takeover is the world's most valuable U.S. energy company, underscoring the value that investors place on cleaner forms of energy, which is being boosted and pushed more and more, as we're saying with the Joe Biden presidency. He has a big plan for that, as well as just, environmentalists pushing more and more, seeing more protests in past years. Everyone is really pushing, or a lot of people at least, are pushing for more, cleaner sources of energy, more renewable energy, whether it's electric cars, hydrogen, more solar power plants or more wind farms, etc. This company is all benefiting from those movements. NextEra CEO James Robo said on September 30th that he would not pursue a hostile acquisition because major deals in this industry could only clear regulatory hurdles if companies work cooperatively. Sorry about that, choked a little bit. Regulators are often concerned that mergers could push up electricity bills for consumers or way high on capital expenditure. So he's just talking about the negatives of a hostile acquisition there and why they can't do that. Now let's move on here. So they're also going to install 135 megawatts of energy storage for Indiana utility NIPSCO's 900 megawatt solar build out, which is pretty incredible. So Indiana's solar capacity is set to surge in the next 3 years as the state's second biggest utility unveils plans to develop 3 large-scale PV projects, 2 of which will include battery storage. Northern Indiana Public Service Company secured build transfer agreements with subsidiaries of NextEra Energy Resources to develop 900 megawatts of solar, as well as 135 megawatts of battery storage. NextEra Energy Resources will construct the projects, and NIPSCO will enter into the joint ventures to own, operate, and maintain some facets of these assets once construction is complete. The build-out consists of a 265 megawatt project, 435 megawatt, 75 megawatt, and a 200 megawatt and a 60 megawatt of battery storage to be constructed in another county. These are all expected to be operational by 2023. So all of these different projects, you may be a little confused why I'm reading all these up. Well, all of these are going to benefit NextEra Energy significantly. It's also going to help them prove to other different states, other governments as well, or counties, that they can do these big projects and that their subsidiaries are able to. And so they're going to get more and more of these projects as the push for battery storage, for solar energy, etc., becomes higher and higher in demand, as we've been seeing. On top of this, they've been trying to produce the world's largest battery. Now, they touched on this at the beginning of the video. Now, they said their backlog is now larger than, entire existing renewable portfolio. It took us 20 years to complete. South Florida-based NextEra Energy has signed contracts for roughly 4,800 megawatts of renewable projects since the beginning of the year, including a record 2,200 megawatts in the past 3 months. This includes the newly announced 1,000 megawatts of solar and storage projects for NEE Inc.'s Northern Indiana Public Service Companies and a 325 megawatt 4-hour battery storage system in California. NextEra Energy says it will be the largest of its kind in the world. And I think this is really important and great timing, especially for California, where we've been seeing, rolling blackouts, lots of different problems going on there with energy, and especially, the electric utility companies. So for NextEra Energy to come in and not only operate in Florida, but also start to, significantly operate in Indiana as well as California, these projects, I believe, will be a major success and drive this company to further greatness going forward. NextEra Energy is capitalizing growing demand from states and utilities that have set carbon reduction or net zero targets. The company frequently touts that the cost of renewable energy has fallen to the point that it is more economical than most traditional forms of generation. What's more, it has developed a battery storage system that pairs with wind and solar, removing the challenge of intermittency that comes with renewable energy. The company has dedicated $1 billion to invest in storage the next year. On top of this, as I touched on, Biden recently is the president-elect. at least what we know so far. And he has a plan to be carbon free in the US by 2035, and he hopes to have the country achieve net zero emissions by the middle of the century, so 2050. He wants to spend heavily. He has a $2 trillion plan for over 4 years. He's going to spend $2 trillion to drive down emissions by upgrading 4 million buildings to make them more energy efficient. Now, who do you think is going to benefit from that? Well, NextEra Energy will benefit greatly from that plan. So let's go over a summary here. So the average 10-year return of 64.5%, that's or 0.05%, that is a great average return for the past 10 years. Steady financial growth, as we saw. Quarter over quarter, it can fluctuate a little bit depending on the different times of month, different times of year. That's just what happens with these utility companies. But year over year growth, it's been very steady. Battery storage expansion. Biden is elected, which is great for NEE. So it's a $2 trillion spending plan that I just touched on. Florida is growing in population where this company largely operates. They also have a huge expansion plan into Indiana for battery storage, as well as California, the largest in the country. Pandemic is starting to slow down and return to, I guess, quote unquote normal. Obviously not yet. We've been having a lot more good news, which will slightly benefit this company and the economy as a whole. Also, it's continuing to invest in renewable energy. It recently shut down its last coal plant in Florida. So it's really seeing that push towards hydrogen, towards wind, towards solar, as well as more battery storage, which will all benefit this company moving forward. Thanks for watching. Please subscribe. Check out these videos. Follow me on Twitter at StockerFinance, or support the channel at patreon.com/StockerFinance. I would love to hear your opinion on this company, what you thought of those articles I read, as well as the financials of this company. Let you know your opinion in the comment below, and I'll definitely respond to you. Anyways, this is StockerFinance. I'll see you in the next video. Peace out.